Hey guys, how's it going? Hey, this is Brand Man. Hey, I'm making this video in response to Da Vinci's video. Some of the guys said show a chart. Okay, what you're looking at right now, you're looking at a weekly silver chart. Okay, I trade commodities, forex, and I've been doing it for about 13 years now. And I make my decisions mainly on technical analysis of looking at charts. Okay, if you look at this chart here from 2008 November, you see that the market had bottomed out, and it's been in an uptrend ever since. Last oh, 16 months or so, 18 months or so. So how do I do it? That's what I'm saying. How do I do this? Well, I've invested in myself, and what I did is I learned how to do technical analysis using charts. Charts are so the closest thing you're gonna get to a crystal ball if you understand them. If you understand how to read them. Fundamentals are great. You don't really need fundamentals to show what's going on. Okay, if you think back here in 2008 of November, where price was down here at 840, you saw it dropping down. Now I do my trading a little different than most people probably ever seen. Um, I use zones, different methods. This is a different method of trading. What it does, it goes from level 1, 2, 3, and 4. What I do, I take the low of the last 5 years to the high of the last 5 years, and I subtract them from each other and divide it by 4. I got this method from Burton Pews. Burton Pews was a renowned trader, and was very, very rich. And this lets you know when the market is oversold and when the market is overbought. Okay, so what I do is I use trend lines, I use 50% levels, I use Fibonacci levels, and so on and so forth. And all of this ties in to let me know my market timing, when to get in and when to get out. Why am I trading commodities when I know that it's manipulated? Well, you can profit if you understand what's going on. I also take physical delivery of silver, not from the COMEX, but from the dealers, such as APMEX, um, Gold Line, whoever, Gainesville Gold, the guys who sell it raw as dealers. Now, what I do, if you look at the chart, like for instance right here, it takes 50. It usually market usually does 50% moves. I'm going to show you something here. I'm going to move it this back. I'm going to show you how I knew went back here when the market hit 21,185 back last year when everybody said, "Oh, the market's going to go to the moon." I said, "No, it's not. It's going to come back down because nothing goes straight up. No market goes straight up. It goes in waves. The 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 rule of the levels is on level 1, 2, 3, and 4 says that when a market is in level 1 extreme, it's time to load up. Load up because it's going to go up to a new high. You won't know the level 4 zone unless it's already happened. Back here at this time, this was level 4. That line right there. So a new high had to be made. So if you see, I'm going to show you on the monthly chart here in a minute if I have time. The market is in an uptrend. So when a market gets into level 4, it has a tendency to come back down to level 1. That's what the market did. It came into it a little bit and bounced off. Okay, that area where it bounced the 840 over here, it hit almost on support, like it's hitting, like you drop a ball on the floor, it's going to bounce back up. The commodities market, the equities market, every market does this. This is what these guys are doing, the talking heads on TV with. This is what they're doing. They're using technical analysis along with some fundamental. Now, if you look at this high of 21,185 and this low of 840, and you divide them by 2, add them together, divide them by 2, you would say the market would at least go to the 50% level of 1391. Okay, let me show you what happened. Market went to 1391 right there in about 3 months. Okay, so the market has a tendency to go back there, back to its 50% level. Now, if you see it now, it's in a trend line going up. Okay, meaning the market flow is up. What does that mean? That swing points, like this here is a swing high point. The market goes higher, you know it's going to go higher. Another swing high point. Market goes high, you know it's going to go higher. Okay, so buy low, sell high. Buy it low, selling it high, buying it low, selling it high, buying it. Like, it's just constant. It's pretty boring, to be honest with you. Once you understand what's going on. So after that, then the market pulled, like you see now, market's pulling back down, doing its 50% from 840 to 1943, which is back around the 1470 area, or back to the 1391 area, which is where a lot of support is. Support is very strong, meaning that the market will bounce at this point. Look how many times that the market has hit this area, this 1391. Here, it went through, came up, went through, came back down. It's been flirting with this line for a long time. So this is where the market looked like it's going to go to now. If it doesn't go there, then it's going to go back down to the level 3 area of 12,605. I'm calling this now. I'm telling you this now because it's happening. The markets never lie. The markets is the truth. All this action you look at has passed. You have to learn how to read or prognosticate a chart. That way you'll know what's going on. Okay, so right now is not a time to be panicking or anything. Right now is the time to get ready to develop a plan on buying some more when it gets low. Of course, all the fundamentals. You look at the professionals, Mike Mahoney and David Morgan, or Mr. Faber, and all these other guys, these other silver buffs and gurus. They're right. There is a depletion of silver in the world. Okay, so that's going to tell you that, hey, something is about to happen huge. I want to show you guys something on a monthly chart. My charts load up. That silver. If you look back here in 1979, really go back here to 71, 72. See what happened? Silver was so low. That's when we got off the gold standard. Look what happened to silver. Oh, gas was high, food was high. Everybody was going crazy. You see how silver broke out of that trend line? See, if I was young. I was a little guy back there. I didn't know anything about this. But if I knew what I knew then, I thought, oh, wow, look at this. Silver's going to break $6.43. I need to buy some silver. No one expected silver to go up to 41.50 and then turn around and come back. No one expected that. But look what happened. And they said, I've read back, they said that they expected this market to go to at least $15 to $20 an ounce. It did way more than that. It doubled. Okay. Now, I'm going to say this real quick. If you look at silver and gold are out of proportion right now. Okay, meaning that the ratio, silver is usually the 15 to 17 to 1, meaning that for every 1 ounce of gold, you should be able to buy 15 to 17 ounces of silver. So therefore, if you look at today's price, look at this. Inflation. Gold should be at $15,000 an ounce. You take 15 and divide it by 15 divided into, let's see, what is that? Then to 1, you should come up to 1,000. So that's the 15 to 1 ratio. That's where the $1,000 mark is coming at. Now, if you look at today silver, gold is at 1,063 thereabouts, and this silver is about 15.23. You divide it, it's at a 69, almost a 70 to 1 ratio. So what should silver be? Silver should be, if you take these 1,063 and divide it by 15, silver should be $70.86. So it's undervalued. It will get there, but not now. It takes time. A $1,000 thing, market, I see that happen in the next 5 years or so, maybe 3 to 5 years. All depending on what these clowns do with the money. See what Obama just did, just threw $3 trillion more out there. Well, that's just increasing the money supply more. Money supply increase, guess what? We're all headed for more higher inflation. It's going to happen. It's happening already. Just prepare yourself. So the Forex market, the commodities market, and the physical silver market is a good way to take advantage of this, because the currency prices will continue to go. They will react according to the U.S. dollar, which is still the main currency around the world. And the commodities market is the market where everyone can be liquid. You can get in and out, in and out. Do not fool with ETFs. They're fake. Okay, guys, I just wanted to let you guys in on what I do and how I'm looking at it.